Hey guys, stopping by. This is Taylor from thetradinganalyst.com. We're going to take a look at the major stocks here of the market. Typically, the market trades either with, or not either, but with them either up or down. So that's why we like to focus and analyze on these key stocks. Okay, so Apple here is the one we're going to start off with. We've got this resistance up here that we're just peeking our head over right now. I don't want to say that we've really truly broken over it. We're very close to breaking over it. If we close higher than we did on Friday of last week, I think that's going to be a true break of this level. But as it stands right now, I think we're kind of at the level here, and I don't want to consider it a breakout just yet. Okay, so we've got this level that was resistance here, right here, and right here. Last time we kind of tried to break over it, this is an earnings report right here, and we headed lower in reaction to that earnings release. Okay, so we got to break. Earnings are very, very key here for stocks, and that's kind of the one one thing that I pay attention to outside of just price is earnings. Okay, I don't actually read the reports or anything like that, but just how did the stock react to the last earnings? Did it break out? Did it break down? Did it trade sideways? It's very important. And also not just what it did on that particular day and following that, but where are we in relation to that earnings release date? Okay, so for example, right here, we're still under that earnings release date. Okay, for example, if we would have headed lower here and then broken over it the next few days, then that bearishness on the earnings date would have been just null and void. Okay, because we broke back over it. Okay, but right now we're still under this level, so clearly it's important. Okay, so got to break over this level. I would say a close over about 215 to me would signify a breakout on Apple. So a close over 215 is the level that I'm looking at on Apple. Until then, to me, it's just kind of holding right here at this resistance. I don't know if it's going to break over. I don't know if it's going to break down. I do think actually that it's more likely that it will break over it, just because for a couple of reasons. For one, we've coming up to it. The first hit, after this big move higher with barely any rest, no surprise that we got rejected here. Okay. Then we took a shallower dip. Notice how this low was a higher low than over here. All right. Shallower dip, and then we came back. We tried it again. All right. Failed. But notice this dip right here made a higher low than this low. So we've got a low, higher low right here. Notice how also we are making higher highs as well. Okay, here's a high, higher high, higher high right here, and this high right here is higher than that high right there. So we're making higher highs and higher lows, and this recent action right here, we kind of took a shallow dip here, and then we just kind of traded sideways up against it. Okay, normally when that happens, you get a break of that level, similarly to how we did over here. Notice how with this, and this is on the opposite end, we headed lower after touching a support level a bunch of times. So right here, same level, kept on getting hit, boom, 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 and then finally we break under it right here. But notice before we broke, we didn't just blast right through it. We headed into it, and we tested it many, many times, and then we eventually broke under it. Same thing here. Tested it here, tested it here, tested it here, tested it here, and then all these, this sideways trading, I mean, they're not tests of that actual level, but we're holding really tight against that level. Same thing that we did right here. Holding tight against that level, and then finally, boom, we broke, and then it just waterfalled. So again, I do think it will head higher and break over that level, but I want to see it prove itself. Okay, I don't want to, because you're going to have plenty of time to react. Okay, notice how maybe on here, if you would have gone for some puts, Maybe some people would have said, oh, it's too far gone, I want to wait until it retraces a little bit higher. Well, then you would have missed out on this huge move right here. So my point is that you can wait for it to break, and you're still going to get a massive move out of it, okay? So that's why I like to wait until it can prove itself. I do think it will do it, but it needs to actually do it, all right? Amazon. Amazon right here is very similar to Apple in that it is trading sideways right here. We pretty much broke out of the range last week right here, but just barely. So I really, really want it to break out a little bit more, and then we can consider this a breakout on Amazon. Really, the start of this week is going to be key for Amazon. And if we do head back lower, we've got lots of support below. So to me, I'm a buyer either way. I do think it will break out. But if we somehow retrace a little bit lower first, I think it's a great buying opportunity. I think we are going to head higher. The other thing with Amazon too, similarly to Apple, is we're making higher lows and higher highs. Here's a low, higher low right here, another higher low right here. All right. Here's a high, higher high, higher high, another higher high right here. All right. So just to kind of give you a visual, there are the highs, and then here are the lows. I mean, it's not a channel, but just to give you kind of an idea. Here's low, low, and low, and they're all increasing, okay? Similarly, on the upside, the highs are getting higher as well, okay? So Amazon, next one is Facebook. Facebook, very similar action. Here, here's the bottom side, higher lows and higher highs. Here's the top side, higher highs. Or I'm sorry, I already said that. I'm repeating myself here. Higher highs, higher lows. We also have, similar to Amazon, etc. We've got the sideways trading right here. Tried to break out of it, but couldn't quite do it. Facebook is one that's for sure not broken out of this range just yet, okay? Because we kind of did that here, and then we had a red candle the next day, whereas the other ones, kind of Apple and Amazon, held up much better on Friday of last week. But doesn't mean we can't break higher. I do think we will break higher, but it just means that it hasn't done it yet. And again, I want to see it prove itself, okay? So the next one we're going to look at is Google. Google definitely held up better than Facebook. You can see right here, and Google definitely looks like it broke out of that range. Again, like the other ones, I do want to see it prove itself a little bit more. But Google definitely, if you look here, it's definitely broken out of that range. Okay, you can clearly see that. Oops. Right here. Okay, so we broke out of that range here on Thursday. Friday was a red day, but we're still holding above that previous resistance, which is now support. Okay. And the other thing with Google is that Google had an earnings release over here that was very bullish. We just needed to come down here, retest that level here, and fill this gap before eventually heading higher. But I think it's very positive that we had a positive earnings release just recently. Next one we're going to take a look at is Microsoft. Microsoft, this one has been the leader here for a very long time. Okay, and to me, a lot of people, they say that FANG is the leader. It's an acronym. F is for Facebook, A is for Apple, A is for Amazon, N is for Netflix, and G is for Google. But Netflix, to me, is no longer a leader. It hasn't been for quite some time, for several months here, and I don't think it's going to be. I don't think it's going to get back into a leadership role. I guess that's a conversation for another video, but I have been talking about this for a long time before Netflix started seeing some lower prices. But I definitely think that Netflix is out of favor. It doesn't mean that it's dead as a company or as a stock or anything like that, but I don't think that we need to be using it as a barometer for the success and failure of the market. Okay, if you notice, Facebook and Google and Amazon and Apple, they all had kind of similar looks. But if you go and you look at Netflix, it doesn't look similar. Okay. Whereas that was not the case. It used to be that they would all kind of trade together. Netflix kind of fell out of favor a couple months ago. I saw it happening many months before it actually happened and highlighted that. But anyways, I'm kind of getting off on a tangent here. But Microsoft, I think, is a much more important stock because it's been leading the way here. And all of these dips have gotten bought. It's one of the strongest stocks out there. And I think it's about to get even stronger, okay? You can see here, we've got this kind of little bull flag right here. Here's the flag, or the pole. Here's the flag. We broke out of that range. We broke over that resistance. Pretty similar look to, Facebook, Google, Amazon, Apple, in that we traded sideways and then we broke out of that range and then we held it. We broke out of the range on Thursday and then we held it on Friday. And this is a leader in the market. You can see that last time we had similar price action was kind of I guess over here. You could say that we broke out of that little flag right there, boom, and then we headed higher. I guess you could kind of say that this is kind of similar, but more so this action here, because this is more sideways trading within a little flag, triangle pattern, whatever you want to call it. And then we're breaking out of that range. We traded sideways for a while, similarly how the market did, and we broke out of that range. And this is what you want to see. You want to see your market leaders, the ones that I've been covering here, trading with the market. Okay, we're not, again, many of them that I covered here have not fully broken out. Like Apple needs a little bit more. I'm just being very particular. It did move higher with the market, but I really wanted to see a little more strength before I can go, full on board, no holds bar bullishness in the market. I'm still bullish on the market, very bullish, but I think that it needs to prove itself just a little bit more with these stocks. These stocks in particular are the ones that need to start really leading once again. And I think that the beginning of this week is going to be key. Remember, we can see a dip here and a retracement back into these levels here on all these stocks, not just Microsoft, but all these stocks back into this range, and it wouldn't be the end of the world. Okay, it would be, I don't want to say the end of the world, but it would be bearish if we broke the underside of these levels on a closing basis. So, for example, on Microsoft, if we came down here next week into this range, that would be no big deal. But if we close below about 132, 131, that is when I would think that Microsoft would be headed much, much lower. Okay, but it hasn't done that yet. I really don't think it will do that. So even if we come back in this range, to me, that's a buying opportunity. And I definitely think these stocks, Microsoft, Apple, Amazon, Facebook, Google, are all going to push this market higher. Just needs a little bit more higher prices to justify that kind of action. So we'll see what it does this week. I have high hopes. Please pay attention to these levels, and I think you're going to do great. So what you're looking at right now is the real-time portfolio tracker at thetradinganalyst.com. We track all of our trades here, and then we alert to members at our premium service. It tracks our winners, our losers, our break-even trades. Everything gets uploaded here to the portfolio tracker, and you can see all of these entries are alerted to members at the premium service in real time via text message. Same thing with the exits right here. And you can see that these alerts are very profitable, and they have been for quite some time. You can see the average win is almost twice as much as the average loser. And you can see, again, if you're looking for a perfect trades with no losses whatsoever, that's very unrealistic, and I don't think you should join our service. But if you're looking for real trades with real consistent gains, then I think you're going to have a great time and make some good money when you join here. You can see here that the total profits here, the total gains of the last 13 months, and this isn't a total account value. This isn't how much the account is worth after all these gains. These are the actual profits, okay? Money in your pocket, okay? Minus commissions, of course. But right here, total gains here for the last 13 months, $312,000. $312,000 in the last 13 months following all of these trades. The entries, the exits, all of them can be alerted to you in real time when you sign up and you join the premium membership. So if you've been struggling to make money in the market consistently, you know, everybody kind of has a win here, a win there. They go on a win streak one week, but it's about consistency in the market, and that's what we do here. So if you're struggling with your consistency, or maybe you're just in a losing streak and you want to get some help getting out of that hole, digging yourself out, this is a great opportunity for you, because not only are you going to be able to make money with these alerts, you're also going to learn how my process and how I trade and how I do things, because I'm sending you a watch list as well. There's another section of this portfolio tracker that prepares you ahead of time for these trades. We're not just throwing you out these alerts. The vast majority of these trades were all put on the watch list ahead of time. So we're preparing you ahead of time, and that A, prepares you for the trades so that you know exactly what to expect, and B, it helps you learn, because you're going to know, I'm going to teach you my process, because in addition to the watch list, most of these trades I'm putting on member videos and explaining them ahead of time as well. So I'm explaining the thought process, my thought process behind the trades, so you're learning, you're making money, and that's exactly why we're in the market. So, if you're struggling to make money, you want to have consistent gains in your pocket month after month. We're not talking about a winning streak here and there. We're talking about consistent gains quarter after quarter, year after year. If that sounds good to you, sign up and join. I'd love to help you out. If you have any questions, please let me know. Otherwise, have a great rest of your day, and I hope to see you inside the membership.